What's up everyone, it's Scotty with Money Investing. I've got quite an interesting video for you to really calculate and understand what it would take for S&P 500 to be at an all-time high based on the numbers of the top 7 companies in the S&P 500. So yes, there's going to be some interesting analysis and it kind of makes sense in my head. I just want to make sure if it makes sense to you. So we're gonna do some calculations here to better understand from that perspective. So I hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, get access to all the buy and sell alerts, options alerts, trade ideas, private live streams, private benefits. Everything's going to be included. So link's going to be down below. So I got an interesting comment today in one of my other videos, and Chris, shout out to him, says, it's funny how people, including you, Caddy, think that 5 to 7 stocks can't take the markets to new highs. When you realize some stocks market cap are higher than 20 singular stocks combined, you will change your mind quick. So Chris has got a valid point, and obviously the market's way too concentrated. It's super concentrated between just a handful of companies, as we've been talking about, and the market breadth is really lacking right now. And it's quite interesting, right? I mean, so basically what he's saying is that he thinks, or he believes, that 5 to 7 stocks can indeed take the markets to new highs, to all-time highs. Now that's the point that I wanted to drill down on and really understand if that's even possible. So I actually created a spreadsheet, okay? I wanted to really understand, okay, what is it going to take? So to give you a good understanding on how this is structured and what I'm really talking about here is I've got the S&P 500 at the top. And the 34.34 you see is the $1 trillion in market cap the S&P 500 currently has, right? So right now, as of the time of this video, the S&P 500 as a whole has a market cap of over $34.3 trillion. Now, S&P 500 at an all-time high. So back when it was at all-time high back in January or February, whenever that was. So if you come over to S&P 500 right now, you'll notice that this was the all-time high back in December of 21 when it was trading at 4,800. So this right here, at that point in time, the S&P 500's valuation was over $40 trillion, so 40.36. So this right here is a chart from YCharts, which kind of shows us that. So, right now they've got the S&P 500 market cap at 34.3 trillion, and back in December 21, it was at over $40.36 trillion. So we have those two metrics to work with, right? Where we were versus where we are, and the difference is a $6 trillion gap, right? That's the difference. That's what it's going to need. That's what it's going to take, really, for the markets to be back at all-time highs, right? So if you go from 34 trillion back up to 40 trillion, we're at all-time highs. So that's what I wanted to study. That's really what I wanted to understand and drill down on. Okay, what is it going to take, right, for these large cap tech stocks to go up to in order for us to be back at all-time highs? That's the question that I'm trying to answer. Now, right now, if you notice, these are the top 7 in the S&P, right? Apple, Microsoft, Amazon, Nvidia, Google, Tesla, and Meta. These are the top 7. And 7 out of the 505 companies in the S&P make up less than 2% of the S&P 500. But as an influence, because it's a market cap weighted index, make up over 27.5% of the index. So almost a third of the S&P 500 is influenced by less than 2% of the S&P 500. Quite the concentration here. And these are the market caps. Of course, Apple's trading at over 2.7 trillion as of the time of this video. So right now, as we're talking, Apple's at 2.7 trillion, Microsoft at 2.3, Amazon at 1.1, Nvidia's a little bit under $1 trillion, Google's at 1.5, Tesla just over $500 billion, and Meta's over 0.6 billion, a trillion, basically 600 billion. So combined, we are at 9.47, a little bit under $9.5 trillion in market cap for these 7 companies. Out of the 34.34 trillion as a whole for the S&P 500. So that's about 27.5%. So now this chart, this matrix, what this really shows you is the individual strength needed on an individual basis. How much do these companies need to actually go up for the S&P 500 to be trading at all-time high? Now, one thing that I do want to point out is this is under the assumption that all other companies, all other sectors, all other 490 plus companies in the S&P 500 don't do anything. All right? They don't go up, they don't go down, they literally stay where they are. They stay constant. I mean, it's difficult to analyze, right? It's difficult to really go with the analysis of the weightings and how that's gonna change for 500 different companies. So I'm going with the assumption in this analysis in this video that these companies don't do anything. Those other 490 plus companies, they stay flat. Just to get a good idea of, okay, so what is it going to be for these 7 stocks to actually move up the market. So once we go back to the analysis here, okay, now the $6 trillion gap, that's what we're working with, right? So because we were at 40 trillion all-time highs, right now we're at 34 trillion, a little over $6 trillion is the gap that it needs to fill. So if we were to assume that, okay, every single company, the 7 companies, the 7 stocks are going to carry their own weight, they're going to contribute equally. So that comes out to about $860 billion, right? Every single company would need to add another $860 billion to their market cap so that the S&P 500 adds $6 trillion as a whole, and the market cap gets up to 40 trillion. So this right here would be the ending market caps if all companies contributed less than $1 trillion in market cap and they went up all of them together. So 31% move in Apple would be needed. Microsoft would need to go up another 37% from these levels. Amazon would need to go up 76%. Google would need to go up 57%. Nvidia would need to be more than doubled from these levels. Tesla would need to also go up 161%, and so would Meta need to go up 143% for these companies to basically add another $860 billion in market cap, and that's going to make up over 38% of the S&P 500 because other sectors are not really contributing, and since these companies are moving up, their weighting will obviously move up with it. So is that likely? Probably not, right? Probably not. Is that possible? Yes, it's possible, but is it probable? Probably not. To go even further into the analysis, if weren't all companies, if only top five, and these are the Apple, Microsoft, Amazon, Nvidia, and Google, right? We're discarding Tesla and Meta in this analysis. If only the top 5 actually go up and all other companies stay constant, stay unchanged, then Apple would need to rally 44%, Microsoft would need to rally 52%, Amazon would need to rally 106%, Nvidia another 172%, and Google would need to up over 80%. I'm just going to go ahead and freeze this column here so that we can look at these things a little bit more in detail. Here, just hold on one second. We've got freeze. I'm just going to freeze this one here. Perfect. So now, if we only take into account the top 3, only Apple, Microsoft, and Google, now this is what we're working with. Because, so look, if we're only down to 3 companies and the $6 trillion needs to be added, every company would need to be adding $2 trillion so that it makes sense. And that means Apple at over $4.7 trillion market cap, Microsoft at 4.3, Amazon at over 3.5 trillion, and as a result, Apple would need to go up another 74%, Microsoft at another 87%, and Amazon would need to rally a little bit over 200%. Actually, by the way, it's not Google, it's Amazon, which is right now worth more than Google at the moment. So no, so it's actually Google. So that's a small mistake that I need to correct. But bottom line is, I mean, right now Google is also at 1.5 trillion, so we need to go up to at least 3.6 trillion dollars in order for it to make sense. So that's another 150, close to 200% rally that Google would need to have in order for this to make sense. And then finally, we arrive at top 2, which is only if Apple and Microsoft were the 2 companies that were pushing higher. They're the ones, they're taking on all the weight, they're doing the heavy lifting, and all the other companies and sectors are literally flat. They would both need to more than double from these levels in order for obviously the S&P 500 to be back at all-time highs. And finally, if it all came down to Apple as the only company doing all the heavy lifting, doing God's work, carrying the team, it would need to be worth over $8.7 trillion or a little bit over 222% rally from these levels in order for the S&P 500 to be back at all-time highs. So no, I don't think that 5 to 7 companies alone have what it takes to carry the markets to new all-time highs. And even if they did, like even if these companies, started to move up again, and even from these levels, the valuation, we haven't even gone over the valuations, right? They would just be insane. That would just be insanity if Apple for some reason was worth over 3.5 trillion. Meta was once again worth over 1.4 trillion. Tesla was worth over 1.3. I can't even fathom Nvidia at over 1.5 trillion dollars. The valuation would be insane. So no, I don't think that just 5 or 7 companies can take the markets to all-time highs. You need a broad-based rally, otherwise it becomes incredibly challenging. Just from a mathematical standpoint and just from a liquidity standpoint, from a market cap standpoint, it's just not feasible. Right now Apple's 7.8% of the S&P 500. It would need to go up a lot for the entire index to move, right? So it has to be broad-based. Otherwise, there's just not going to be enough breath. There's just going to be too concentrated at all times. So hope you guys enjoyed this video. Hope it makes sense, and hopefully you can get a little bit more context into the market cap analysis and of course the weightings and all those things. Let me know your thoughts down in the comment section below. A little bit of a different type of analysis. Obviously, this is not an ideal, not a perfect world. So obviously this is not going to happen because other stocks are going to move, other market caps are going to change, weightings are going to fluctuate. So there's a lot of variables at play, and that's something that we have to keep in mind, of course, when we're doing our analysis. So hope you guys enjoyed it, find it helpful. Make sure that you drop a like, subscribe to the channel. As always, happy investing. I'll see you all in the next video.